Imagine watching Bitcoin skyrocketing and you are not quite sure if you should jump in. Then a few days later, it drops and you are left thinking like, I wish I had known. Also, the good news is you can learn to read this chart like a pro with no fancy degree required. Stick with me and I will share you simple tips that can help you trade smarter and avoid costly mistakes. In this video, I will break down everything step by step, share practical tricks used by successful traders, and explain how you can start applying these techniques today. Before we dive in, this video is meant for learning purposes only and not to be considered a financial advice. Always do your own research and consult professionals before making any financial decisions. So what exactly is technical analysis? Think of it as reading the market diary. By looking at the past price movements and trading volume, you can spot patterns that help you guess what might happen next. And the best part, you don't need to be a math genius to start. Each candle represents a specific time frame. The longer the candle, the bigger the move. Also, the volume matters. If the price is moving with a low volume, that means that move might be weak. And on the other hand, strong volume gives the trend more credibility. Now let's talk about trends, the heartbeat of the market. There are three main types: upward, downward, and sideways. And uptrend means buyers are in charge, pushing the prices higher. A downtrend means the sellers are taking over, and the sideways shows the market is a bit indecisive. Trends comes with momentum. A strong upward trend will be having an increment in volume, while a weak trend might show declining volume. Tools like moving averages can help you confirm these trends and direction of trends like this. Have you noticed how prices bounce off the same level? That is what we call the support and resistance. Support is where the buyers pumps in and stop the prices from falling further. Resistance is the level where sellers push back to keep the price from rising. Watch out for breakouts. When prices moves above the resistance level with strong volume, it usually signals the trend will continue. But be careful of false breakouts where the move isn't really backed up with enough momentum. Chart patterns are like clues that the market gives you. For example, a head and shoulder pattern that often means a trend reversal is coming soon. Double top pattern can signal that a drop is on the horizon. And triangles might indicate a breakout is about to happen. Always confirm these patterns with volume analysis. A pattern accompanied by strong volume is much more reliable than the one that is not. Technical indicators. They are like trading compass. For example, the relative strength index or RSI helps you figure out if a market is oversold or overbought. Moving averages smooth out price data to show the overall trend. Combining these indicators together might give you a more complete picture of what is happening in the market. Start with one or two and add more as you get more comfortable along the line. If this feels a bit overwhelming, you are not alone. We have all been there before, wondering what if I mess up, or how do I know I am doing this right? The trick is to keep it simple. Just focus on mastering few basics like supports, resistance, and one or two key indicators, and then practice over and over and over. Using historical charts for backtesting is a smart way of learning without risking money. It builds your confidence and helps you see the real patterns over time. Technical analysis is a powerful tool for any crypto trader. It takes time and practice, so start small and you see the results. If you found this video helpful, hit that like button, subscribe to Cryptocoon, and share with your friends. Drop your question or idea for our next video in the comments below. Until next time, stay sharp and trade smart. Thank you.